Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Welcome back, everybody, to Digital Currents, and a huge welcome back to my partner and friend, Mark Yusko. He is fine, well, okay, and rested, unlike me, who is just running on fumes.
That's right. Konnichiwa. I am back from Japan, and what an amazing trip. And we'll talk about that, I'm sure. And I'm sorry you're having to deal with the dog days of new fatherhood, but it's the joys along with the pains of having the little ones. But hey, a bunch of little things, crazy kind of stuff in my life. So the sock reveal will tie to a bunch of things here in a second, but I'm in the office today, so it's a little more complicated to step up. But anyway, so I do have I put on the rocket ship, and on the other side is the Bitcoin logo in the moon, and I am sporting my new Onitsuka tiger.
Love
shoes
those.
that I got in Japan. That place, the store was a madhouse. I mean,
Wow.
it was crazy. I mean,
my
and
God.
people from all over, the tourists were there, and
How did it compare to like a Black Friday? Was it on that level?
it was. I mean, it was, and this is the main shopping street in Tokyo, and they have this little store. It's pretty small, but I mean, you had people from the Middle East, people from Latin America. I mean, different languages being spoken everywhere, and people were like fighting each other for the shoes. So I guess I haven't had them since high school. I wrestled in these shoes, and that's how they kind of got their start. And so
Well, they look
not
great.
often.
They look
But,
great. You picked
sorry
great
to have
pair.
hair.
Yeah,
But-
they look great.
So here's the crazy thing. So I was today years old when I learned that there was, look at this. Okay. This is an image of a buckazoid. Okay.
Right.
There was a game in 1991 called Space Quest
Okay.
that had buckazoids, and that is a bee, like
That's
a
a logo.
Bitcoin logo, right?
Oh, yeah. Oh,
with
yeah.
a rocket ship on a coin.
Mm-hmm.
Now, there's no way my phone knew that I put those socks on this morning. But
No.
literally, that gets served up to me this morning. And so, and the lore behind this is someone said that the two developers at Sierra Games,
Mm-hmm.
one was named Satoshi and the other had a last name of Nakamoto. Now,
Wow.
I did some checking, and those
Yeah.
don't check out. It was an American company run by a husband and wife team. Sierra did exist. Buckazoids are real. That image is a real image of a coin with a rocket and a bee with the little hashtags on it. So, but what's interesting is when I was doing that search, what came up, again, I was today years old, when I realized that pretty much everything I spend my time on seems to be created by a guy named Satoshi, because I did not know until today that the creator of Pokemon's name is Satoshi.
Wow.
And when I was in Japan last week, I got an Uber, and look who my Uber driver was.
No way.
The Uber driver was named Satoshi.
Oh,
So,
my goodness.
I mean, it's kind of wild. So, because I do spend a lot of time playing Pokemon. I do spend a lot of time now playing Monster Hunter. And I've spent a lot of time obviously in Bitcoin. So Satoshi is everywhere, but kind of fun.
Well, Mark, since you've returned, So much has happened. I'm so excited for you to be back because there was one story that we'd been tracking for a while, speaking of reunions again, that I'm sure that you saw out in Japan. And that is the return of our two beloved astronauts. No, they are not in love with each other. They're in love with mankind now that they are back to Earth after what was just basically the space version, Mark, of Gilligan's Island, a 3-hour tour that ends up being seasons upon seasons. They are back here safe and sound. And, that is thanks to the beauty of AI as well for being able to send all of these complicated systems over to get them. And that was actually the systems. And that's a big thing with AI as well, is the process to run analytics and to debug. That's what saved their lives, right? So when they were first, making their initial arrival, the craft was deemed to be unsuitable to be able to return, right? And how do they know that? It's not like a human being can walk in and determine if it's bad. Well, it's too late then, right? You have to be able to run a system check before then. So we're happy that they're back, and something that we're probably not as happy about, but something that nonetheless we have been talking about extensively is the trade wars are back in full swing, Mark. We have many chapters that have been written, and I will probably commence, Mark, with quoting my old high school yearbook, and a quote that I'm sure you're very familiar with is, "As much as things seem to change, they seem to stay the same." And that is, when we look at our markets, right, the macro impact here, it's on everything, but we've kind of come to a time when there is a relative calm, but I can't help but feel that this is the low tide getting ready to reset the high tide as we kind of look to see what's going to happen next week in retaliation, much in terms of what the Asian markets respond to, specifically China within the U.S.
Tide is the appropriate word, because what I really should have worn is my socks with the famous Japanese wave.
Oh, yeah.
That iconic image.
Yeah.
And it's cool. There was a T-shirt in Japan of the wave versus Godzilla. I definitely should have bought that, but
100%.
Get it. She wouldn't let me get it. But that ocean of liquidity is about to be created because we have advising the president on this nonsense of tariffs are good and trade wars are easy to win. Only that type of person would write a book and refer to a made-up person that is an anagram of his name. So Ron Nava or Nara or whatever is just Navarro. And so, and here's the crazy story, X is, so Trump says to his son-in-law, "I need an advisor, an economic advisor to make me look tough." So Jared goes to Amazon and looks for a book written by somebody about China and trade. And he comes across this guy, Peter Navarro, who wrote this book about, taming the tiger or whatever it was called, taming the dragon. And so he's, get me that guy. So he's got this guy who, against 249 years of data, right? We've been a republic for 249 years. We have 249 years that show the tariffs have never been a good idea. We tried them twice in our history, in 1820s, in 1930s, and now again, this is the third time. And you say, well, why is it 100 years apart? Well, because it takes 3 generations to forget how stupid an idea this was.
You got to rinse off all that stain.
Yeah, because the generation that does it, they go down as just being idiots. Then the next generation says, God, those guys were idiots. Can you imagine how stupid that was? Then the next generation is kind of like, well, I don't really remember Grandpa, so I'm just going to start partying. But then that fourth generation was like, hey, I got a great idea.
Right. Well, that's what happens when we burn the books, all right? I think that's kind of the road to no return, as we say on this show. It's, you know, the two most important subjects to be studying are history and math, because both are in search of truth. And as kind of we look at what the impact, Mark, was to this market, it was carnage across the board, right? So you're looking at effectively a reset of all post-inauguration gains in markets. So we sank to the 2025 low around in BTC. And, you know, it also demonstrated again what the real gold is. It's gold, right? And I think
gold. It's that thing that you can grab and you can put in a vault, and the Fed can't print it. And look, it's only because of 5,000 years of history and precedent and custom that we as mankind have decided that gold, rather than platinum or silver or copper or some other scarce mineral, happens to be the thing. But it doesn't really matter that it is the thing.
Mm-hmm.
And 5,000 years is a long time. And the next 5,000 years, we will likely see this shift from physical gold to digital gold, Bitcoin. But the problem is right now, you say, you know, so markets crash. So stock markets crash, and then bond markets crash too, which that was not supposed to happen.
Surprise.
Yeah, I was surprised. And then, well, Bitcoin went down, and well, why? Well, remember, in liquidation markets, not like normal corrections or bear markets, but in liquidation markets, meaning when there's a market that has a lot of leverage in it, okay, you get a margin call and you have to sell something to meet your margin call. And so if your NVIDIA stock goes down 30% and you owe the bank money or the brokerage firm money because you took out a margin loan, you can't sell the NVIDIA stock. So you got to sell something that's not down. Well, you sell bonds or, you know, cash if you have it. But if you run out of cash, then you got to sell Bitcoin. And so more hedge funds and institutions had these other assets. Now, normally, when that stuff starts to go down and people get worried, they flock to the bond market. And so bond prices have been negatively correlated to stocks. Well, but not this time. So even though the Fed cut rates and even though stocks were going down, bonds were going down. Why? Well, because a bunch of big hedge funds, particularly people in Japan and other places doing the Japanese carry trade, where they would borrow in yen. Everything goes back to Japan today. They would borrow in yen for free, and then they would buy these other yielding assets. Well, some of those other yielding assets were bonds. And so now these big hedge funds, 60, 80 times levered, are having to sell. And then 5,000 years is an important date. Why? This morning, or last night, I guess, because it's 13 hours ahead over there. Last night, I'm not sure which minister he is, but one of the ministers in China was interviewed, and they said, well, you know, isn't this a bad thing? And these tariffs, and what are you going to do? He says, look, China's been around for 5,000 years. Yeah. And most of that time, the United States didn't even exist. We'll be around for another 5,000 years. And if the U.S. really wants to say you're locked off and we're going to delist your stocks and we're not going to trade with you, or we're going to put these, it's like, so what? We do 92% of our trade with other people. We'll just beef that up. This morning, they canceled all the contracts for LNG. So all the U.S. companies, they were shipping their LNG. They're like, nope, we're not honoring the contract. So these tankers full of LNG are stuck offshore, and they're like, you know what, we'll just buy it from Australia. Because the reason I get so upset about this whole situation is entirely preventable.
Oh, yeah.
this idea that somehow China is our enemy is illogical. And there's another guy who went through the history of all the things that the United States has done as aggressions against China for the last 100 years, including arming Japan to invade China. I mean, all kinds of nasty, nasty stuff, arming the combatants to go to Hong Kong to disrupt. I mean, really bad stuff. China's not been involved in one conflict in the last 100 years.
Yeah.
Right? They haven't gone to war one time. And so while we've been spending all this money, and estimates are like 60 trillion with a T, to drop bombs in the desert and do all that stuff, they've been building infrastructure. And so I'm sure you've seen the videos of the gleaming cities in China and the drone swarms and this new bridge they're building that's 9 times the size of the Bay Bridge that cost $250 million. Think about that. They couldn't even do a drawing of a bridge in the U.S. for $250 million, right?
Yeah, I think my local...
A new stadium here in Chapel Hill, right? They want to do a new basketball stadium. It should be called Air Jordan Arena, and Michael should fund it with 1 year of his receipts on Nike shoes. But seems to think. But anyway, they're saying it's going to cost $500 billion.
Yikes! Yeah, it's wild, Mark.
No, I'm sorry, no, 500 million to a billion, and like
right, to a billion.
500 million to a billion.
Still a wild number.
Come on, for a stadium?
Right.
To
Right.
watch basketball?
At least we're not calling it amateur athletics anymore because NIL has changed that. These are pro athletes. They're just slightly younger pros and not as good as the ones that we see on ESPN. But, to your point about the sales and kind of how that reset the market and kind of the forced margin calls, you had 1.5 billion in long crypto bets that were liquidated on Monday, right? Wiped out. And I think what is interesting here, and Mark, I always try to find a silver lining for our listeners to not incite a panic. It's that the market is still here, right? And I think that's the really critical piece when you look at BTC, that it wasn't worse as some of the other markets
100%.
were really shattered, right? So it kind of shows that this could be a moment where it shows potential uncorrelated sources of return during moments of macroeconomic uncertainty. Because if you think that,
it's a great point. We're the same price today as we were a month ago. The exact same. There's been a lot of ups and downs in that period. And we're only 23% below. There's that magic number 23, Michael's number.
That's right.
23% below the all-time high from December. Now, there are plenty of Mag 7 stocks down 50, 60, 70%, not 23%. So, and people say, well, no, it's supposed to go up when the market goes. No. That's not uncorrelated. Doesn't mean inversely correlated or negatively correlated. Uncorrelated just means when something happens over here, that doesn't determine what happens over here. That they're just independent of one another. And maybe they're going to go at the same time, but maybe they're going to go differently. But negative correlation is different than uncorrelation. Now, the other thing that I thought was interesting is, Bitcoin volatility has been trending lower, right? And then it got higher again. And everybody says, see, it's just a risk asset. Well, now, because of the correction, equity volatility is now surpassed the volatility of Bitcoin again. And again, volatility is not your enemy. Volatility is simply an indicator of uncertainty about a future outcome. That's what volatility is. So a lot of people are uncertain about equity future. A lot of people got caught off sides in these levered long trades and they got liquidated. And that's unfortunate. Here's the thing. Anyone who levers up a 60, 80, 40, even 20 vol asset,
right,
you deserve what you get. I'm sorry.
Yes.
If you lever government bonds, which normally are not super volatile, okay, that's a decent trade. And a lot of banks do that, and a lot of hedge funds do that. The problem is there are these tail events, which we just saw, where, yeah, if you're 60 times levered long treasuries, you're going to get liquidated.
Yeah. And to your point about XRP, Mark, I'm sure that you saw this, and I don't want to unleash the army upon us both, but there was a new fund, the TIA. They basically have a levered XRP. So instead of holding it directly, it offers potentially twice the daily return of XRP, but of course, meant much more of that than the actual volatility of the underlying asset. It's unusual because you have this passage of this ETF of a more exotic structured product than the base protocol itself, which is still, it's slated to launch later this year.
Financialization is about making money. This is the thing that people miss. They think that these tools, these ETFs and the double levered and the inverse ETF and the double levered inverse, they think somehow that those were designed for them to make money.
Right.
No. They're designed for the company to make money. And part of the problem with them, particularly the inverse ones, like the inverse ones destroy value every day, just the way they rebalance daily. But you're paying the fees. So lots of fees go to the sponsor, and you end up losing money. And same thing with levering up these highly volatile assets. Now, at least with the levered long product, as long as you have the intestinal fortitude to stomach the incredible volatility and not sell at the bottom, you'll actually be okay. Don't do the inverse, the short ones. But levered long, it's kind of like MicroStrategy, or MetaPlanet that I'm on the board of. You say, well, what are those? Well, they are essentially levered long, 1 times levered, half a times levered, not 20, 30, 40 times levered. So 2 times levered, even though I wouldn't put any leverage on XRP. I actually wouldn't own XRP personally, but if you want to own it, there's plenty of vol there.
Sure.
I probably wouldn't lever it, but at least with the long levered products, if you have a long time horizon, you'll be okay.
Right. And then you have reports, Mark, where I think people are getting involved in our industry, potentially with good intentions, but with bad outcomes. So you have something like Standard Chartered reporting XRP could rise 500% in 3 years. And as a retail investor, you see that and you say, oh, okay, well, I'll buy the ETF, not understanding really kind of what the fundamentals are beneath the protocol itself. And it's really sending the wrong signals. And, you mentioned MicroStrategy. One thing that I discussed in the last couple of weeks was our old favorite malign gaming company, GameStop, buying Bitcoin and getting hammered as a result because they were using leverage to buy this as opposed to their own, stock. So they basically took a shortcut, right? So MicroStrategies kind of ran out of its traditional way of buying, backing on its own stock price, and then started issuing basically 0% yielding bonds in order to buy more of BTC. So then GameStop said, well, let me do it as well. However, MicroStrategy doesn't have an underlying business that's as volatile as GameStop, right? Bitcoin is volatile enough. But with GameStop doing this, they basically in the week, or I think market was within 48 hours, they were down twice as much as what they borrowed. And of course, pretty upside down this week. So again, just so much while you're away.
You're absolutely right. I mean, the problem with being a meme stock, right, is people don't buy you based on the underlying fundamentals.
Mm-hmm.
They buy you based on the meme, right? On the story, on
Reddit,
the image, right?
Uh-huh.
And that's fine for speculators and gamblers. It's not good for investors.
Yeah.
And so I actually give a little bit of props to Ryan, the CEO at GameStop, for saying, I have this big cash hoard because I was able to issue a bunch of equity at the high price that was a result from the Roaring Kitty squeeze, and my underlying business is recovered. Right? It was almost extinct because of lockdowns, but now it's recovered. People are going to the movie theater, and I don't go as often. I still love going to the movie theater.
Oh, I love going to the movies, Mark. It's just like a comfortable time of a bygone era. You can relax. Yeah, I'm with you.
And there's just nothing like seeing certain types of movies on the big screen. Like you want to watch a sitcom or you want to watch a rom-com or you want to watch on your little screen, it's fine. But a big spectacular, a Star Wars, a Maverick, I mean, you gotta see that in the big screen. But what Ryan said is like, I got this cash hoard, and just like Saylor had the realization, I mean, Saylor had more of an extinction event for his underlying business. His software business was kind of going away, but he still had this big cash hoard. And he's like, but every day I hold the cash, the government's stealing a little bit of the shareholders' wealth and my wealth because I'm a big shareholder. So I'm going to convert this fiat holding into Bitcoin. Well, that worked. Well, then I'm going to issue more shares to buy more Bitcoin. So my Bitcoin yield, my Bitcoin per share is going to go up because people will buy my shares. And that's what Metaplanet does. That's the ATM. Well, then they're like, well, this is great. People will then give me loans because there's a bunch of people that run ETFs or mutual funds that are prohibited from owning stocks. They want exposure to Bitcoin. They can't buy Bitcoin directly. So, hey, how about you issue bonds? And this is the best part. They're not secured by the Bitcoin. It's not like borrowing against your Bitcoin. You're basically giving them an unsecured loan, convertible into equity for zero interest, to your point. That's a godsend. And so I think what Ryan should have done at GameStop is he got $5 billion in cash. He should have taken 20% of that, $1 billion, and just bought Bitcoin day one. Said, yep, I love this. I'm going to diversify my fiat asset. And over the next, 5 months, I'm going to buy $1 billion a month. Done. Then he should have gone out to borrow the money to buy more. Instead, he went out to borrow, which, the bond investors are like, yes, give me that. But then he didn't buy any Bitcoin. And the market punished his stock because meme stock holders I won't say they don't appreciate, they just don't care about fundamentals. They just want number go up. Yeah. They want more roaring kitty, lean in kind of pictures.
And kind of reverting to that, Mark, is this idea of the flight to quality. So there are a lot of themes that we're going to touch on today. We won't be able to kind of expand on all of them just because it was such a wild week. So the idea of the flight to quality is definitely a big one, right? Which is why I think, Bitcoin has steadied itself, obviously, after the 1 p.m. tweet. I was in Costco, so everything starts going crazy because there's parts of Costco where you don't have service, and then you get to another part, and like the world just turns back on.
Yeah.
And so now what was interesting as well, Mark, is just the stable coin market, which we have kept a very close eye on. We have a bunch of positions in companies that are enabling this. And so why is this market important, right? So last year, it tallied 27 with a T trillion in transactions, right? So what this means is that people are using this as a digital substitute to send all kinds of things, from remittances to paying their electric bills.
Yes.
And so what does that mean for companies that are part of this transition as we effectively look to replace SWIFT? What this means is acquisitions aplenty, right? So one big one that happened was MoonPay's acquisition of Iron. Iron is a stablecoin issuer, and that was $100 million acquisition. This company raised, Mark, I believe, something like $3 million on a 12 million valuation. So the investors did quite well. But that was not to be outdone because a couple of months earlier, MoonPay acquired another similar company called Helio for 175 million, also very early stage. And what this is pointing to, in my view, Mark, is that you're going to continue to have a surge in appetite for on-ramps from fiat into crypto, specifically for banks and other fintechs that are looking to do payments. As the world becomes a little bit more uncertain, some assets are a little bit more uncertain, but a thing that is much more dependable is reducing the settlement time to T instant. And so you're going to see more.
I mean, X, this is the most important point of all of digital assets, right? Which is this idea that in the current system, and look, the current system has worked pretty darn well for 840 odd years. But now we have finally the technology to replace it. Now that's a long time coming, but the old days of, you had chickens and I had cows and we met at the market and we traded. That was a really bad system because cows were hard to get to market and chickens pooped everywhere. And so you minted coins with chickens on them and I minted coins with cows on them, and we'd bring our Sacco coins and we'd trade the coins and then we'd cash them in for physical goods. Well, but then the sacks got heavy and on the way we got robbed and they took our Sacco coins and then they came and got our chickens and cows. So we put those in the bank. Pretty good. They gave us a piece of paper and then you and I could exchange paper. And that was a better way of doing business. But the problem is, once you give those Sacco coins to the bank, it belongs to the bank. And they can say, well, I don't like you trading with X for chickens. I want you to trade with Jerry for pigs. Well, no, it's my money. Oh, no, foolish boy. It's not your money. It's our money. And you have an IOU, and we'll honor that IOU if you do what we say. And so if you follow the rules and you're a good citizen, then everything works out. And most of the time, that's fine. But how about if you and I want to trade on the weekend when the bank happens to not be open, or at midnight, which is my most favorite time of the day, and, the bank's not open? You're out of luck. Well, stable coins actually give you 24/7 bankability, meaning I can be sitting on my couch on a Sunday and I want to buy an on-chain monkey. I can do it. I don't have to call the bank. I don't have to transfer money. I don't have to pay a wire transfer fee. I just take my Ethereum, now Bitcoin, because they just transfer it onto Bitcoin, which is amazing. And Danny Chen is just amazing. And long story short, this is a better system, right? We don't need 75-year-old technology, Swift, that still uses fax machines.
Wow.
Literally uses fax machines between banks, like physical pieces of paper that can get lost or damaged. We don't need any of that because now we have this global computer, this global network that creates tokens, line items on ledgers, and those line items can change 24/7, and we become our own banks. And that system is superior, and that system is going to win. And so the genius of what MoonPay is doing is they're like, okay, I'm gonna get everybody onto my app by letting them use the old system, credit cards to buy Bitcoin or to move money around. And yeah, you can have the plaid in access to your bank account or your debit card, but most people want to charge it. Long story. Okay, now we got you. So now you're in our system. Well, now how about instead of using the bank where you might have to get permission or it might not be open on Friday night, how about you convert some of that fiat into stablecoin, and then you can use anything in our system anytime you want? That seems better. Ultimately, do we have a system where there's just one and everybody does everything in Bitcoin? Maybe, probably. But in the short run, Bitcoin is this base layer as gold. Like gold is money, right? It's an asset that exists in the absence of liability. Then the other systems sit on top of it. Stable coins can act like this Fedwire system and the ACH system, far superior to Swift. So it's a pretty exciting time. And the numbers you just quoted, those are real numbers. Like, we start talking hundreds of millions and billions of dollars of value created for investors. Now, JP Morgan is going to fight it. Bank of America is going to fight it. But at the end of the day, new technology wins, right?
Right.
You'll ride around in horse and buggies, as quaint as that is. I mean, except the Amish, and they have a pretty nice life. But most of us ride around in cars. And some of us I get to go on a bullet train in Japan. Oh my God, X.
Super cool.
How can we not have them in the United States?
Let's make it happen.
Literally, how can there not be a bullet train from New York to Chicago or Chicago to LA? I mean,
You don't have mountains. You don't have you don't have big barriers in water. It is set up for that.
it was so pleasurable and so easy. Anyway, but I digress.
Well, one thing, Mark, that we'll have to continue this theme on the flight to quality has really been demonstrated in our world by the flight to RWAs, right? Which is the real world asset, finding a way to tokenize real stuff, but just basically give it a digital twin, if you will, to allow a smoother and faster way to transact. So we got to pull up some activity to show really just how active this market was. One won't be that much of a shocker to you, Mark, because it basically mirrors, what started happening in the gold market, where we, surpassed the 3,000 mark, which is pretty insane. But this is the kind of the digital representation here. Let me know when you can see my screen. And so this is from our friends over at CoinGecko, and it's showing, relatively steady activity in some of the underlying RWAs for gold, and then a dramatic rise up, as well as some volatility in those assets on the RWA side. And for those that are on audio only, we'll remind you, as always, check us out on YouTube, where you can see so many things. You can now have physical proof that Mark has not been deepfaked or is in any distress whatsoever. He is here with his awesome ASICs, which I'm a huge fan of. And then also, as a bonus feature, Mark, since you were away, we'll have to hit our listeners with a second chart of the week, which is kind of backing into the same thing, which we can discuss probably a little bit more. This is an interesting one because in addition to gold, which not a ton of surprise there in terms of shooting on its way up. Now this, if I can try to make it a touch larger, is what is attempting to show is a couple of different assets that have been tokenized: private credit, treasury, corporate bonds, institutional alts. And so we've hit a new all-time high, 20 billion with tokenized private credit representing the lion's share of this. Mark, when you look at this, we're going to have to rename. I know I've got, son number 2, so I am fresh on the boat or off the boat with dad jokes. I'll say, Madonna said in the 80s, we live in a material world. I'm going to say we live in a digital world. And this is the representation here. Mark, what are your thoughts when you see this RWA activity?
Look, normally I would say, oh my gosh, that's such a chart crime because, the exponential rise really isn't that big because you need to use a log scale. But you only need log scale on a chart when it's a long-term chart. These are short-term charts. The thing that's happening in these markets is accelerating so fast because they are real use cases of technology whose time has come. And we've talked about this really since we started Morgan Creek Digital back in 2017, 18, that every asset, every stock, every bond, every currency, every commodity, every piece of art, every collectible car, every case of fine wine, every private business, every piece of real estate, every asset, all $700 trillion of assets in the world will eventually be an RWA, a real world asset tokenized on a blockchain. And all value will transact on chain. And most people say, no, that's never going to happen. No, you don't understand, right? We lived our life for most of the 249 years of the U.S. Republic and China's 5,000 years of being around as offline, right? Physical. If I wanted to trade gold with you, I had to bring a bar of gold and give it to you. I couldn't break it and send it and push it into my computer. I still can't do that. But if we tokenize or if we electronified it, we went to the online world. And so now much of our life is about online transactions and online activities. But the issue with online is that it's centralized. It's controlled by a very small number of very powerful gatekeepers, banks, big tech. Well, the on-chain world is a liberator. And I shouldn't use that word because, Trump called his tariffs Liberation
Day,
which is just such nonsense, right?
So that won't be the 14th Morgan Creek public holiday will not, spoiler alert, it will not.
No, it's just such nonsense that somehow we were being tyrannized by, countries that were selling us the goods that we demand. Look, in the 1800s, we were an emerging market that converted raw materials into stuff and sold to the rich people in Europe. That's what we were. We were a little emerging market. Now we are the most wealthy, quote unquote, most powerful country in the world. Good for us. Yay. And we're a consumer economy. We don't make stuff. We use stuff.
Right.
And that's not a bad thing. In fact, there was a mom, right? This mom, she has an at-home business where she makes specialty baked goods, right? Very cool. And some of her stuff is beautiful. It's like art. And she said, I have a massive trade deficit with my grocery store. I buy stuff from them all day long, and they buy nothing from me. That's unfair. I'm going to have to put tariffs on them. In fact, maybe I should diversify, and I should grow all my own wheat. I should mill all my own flour. I should grow the specialty fruit.
Right.
No, that's just stupid. I mean, they passed a bill yesterday, or signed a bill, and it's never going to work, but to bring shipbuilding to the U.S. But here's the problem, X. In the past year, 12 months, China made more ships than the United States has made since 1944.
Wow, that is quite a stat. That's insane.
We had a net loss of ships last year. We retired more ships than we made because we don't have the facilities to make ships, and that's okay.
And maybe we're just not doing the required reading in our schools, Mark, of the art of the deal. Maybe we have just missed that whole point. And another dad joke, the revolution, Mark, will not be televised. It will be tokenized.
Tokenized.
Right? As we see here.
And look, the idea is if you're really good at art and I'm really good at playing Pokemon, we should swap those skills. And I don't know what you get other than maybe a few good Pokemon cards, but it doesn't
get a relationship, Mark. You get a relationship. And I think that is the critical piece about all of this. Markets are all relationship driven. Obviously, you have to have the fundamentals, but the idea that we had a rug pull over our eyes about what the tariffs were supposed to be, when if you just do any sort of math, it's about the trade deficit and imbalance. You cannot overnight change an entire industry when it's just fundamentally cheaper to grow things in other places or manufacture things with better facilities in other places. The dependence upon what you have versus what I have is what creates modern society.
And that is, I mean, look, people do things differently. You don't grow oranges in Ireland.
No.
You don't, right? And so, but we don't have as many sheep here. So if we can grow oranges in Florida and trade them for wool out of Ireland, that makes a lot of sense. Now, in order to do that, you need ships. So you need someone to build the ships. Well, we all decided 70 years ago that we didn't really like shipyards in our backyard because they pollute and and you got to make the steel, and that pollutes. So let's send all that pollution over to China, because they have a bunch of, now, our vice president calls them peasants, like very, very dumb, just dumb. I mean, it's dumb to speak derogatorily about anybody, but that's just really dumb, because years and years ago, they had an agrarian society, just like we did in the 1800s. We were peasants, and then we urbanized, and then we industrialized, and we became more suburbanized and more sophisticated. We're no longer peasants, but the point is that the people who are willing to do a certain job depends on their circumstances. Sure. So, you've seen the memes of are suddenly, you had the Lutnick, our commerce secretary, say on television that we're going to have millions and millions of jobs come back to the United States of people screwing in the little screws on iPhones.
Oh, right. I saw that. That's really not what you want to see as far as the advancement of a STEM education, right? Which was the other reason.
I think what he was trying to say is we're going to have the people who run the automated machines that screw in those little screws. I hope he really meant.
I hope that you're.
I hope I'm right, because I don't think he really meant that what we want is the $1.50 an hour sewing machine and assembly jobs back in the United States. Because again, we had those 70 years ago, 150 years ago. We used to chain people to sewing machines in San Francisco, like literally chain them to the sewing machines to get them to do their job and not run away. So we were not OSHA friendly when we were going through our development phase. And I'm not saying that's what China's doing, although everybody wants to say it. But if someone chooses to take a job in a sweatshop in Bangalore or Bangladesh or Vietnam, and they're willing to work for $1.50 an hour, we say, oh, that's wrong. Fine, but if their choice is starvation or $1.50 an hour, so they have enough money to buy food, it's better, and it will get better. Each incremental step of development gets better. And this is the part that I don't know why this is lost on everybody. Yes, 50 years ago, China had 700 million people in abject poverty, like such poverty that no one in the U.S. in this generation can understand, right? Literally, you couldn't understand. If you lived in the Dust Bowl in the 30s, you could understand it. But no one in this generation could understand that level of poverty and that level of poverty. And over the last 70 years, they took those 700 million people and they built 5 cities the size of Philadelphia every year and moved them into urban middle class. Now, that's not like what we think of middle class, like white picket fence and 2 cars in the garage. It means an apartment, an air conditioner, an iPhone, and some luxuries, maybe eat out occasionally, but way better than the abject poverty. Well, now they're stepping up from that lower middle class to a better middle class. And that renaissance means now the greatest consumptive force that the world has ever seen exists. And we should be embracing the opportunity to make stuff, whether it's music, art, not physical tchotchkes. That's not what we should be doing. We should be selling them software, tools, creativity, and selling into the greatest consumptive market in the world, not antagonizing and having Xi say, well, you know what? You want to be a bully? Fine. We're good.
Right.
We're good. We'll deal with the rest of the world because life's short and I don't need a bully in my life. I'm like, wow, that's right. And I don't understand why this is so hard. I mean, I really don't.
Well said, Mark. That's probably a great point to wrap because, it's one of these ideas that the world order is getting reset in front of our eyes. We tend to spend most of our time focused on the economic impacts of evolutions to technology. And those evolutions facilitate global change, right? And so we're going to continue to monitor what this means and give it to you guys every single week as we do here on Digital Currents, and remind our listeners, as always, rate, review, subscribe wherever you happen to podcast. Check us out on YouTube, and as always, to stay current. Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.